So thank you, everybody. Thank you for tuning in. Today's December 7th, and today we are doing our session. The topic is real estate rebound, lower rates, higher sales, and what's next. So we'll discuss that. So as usual, first I'll do my PowerPoint presentation, followed by our Q&A session with expert panel. So Kishore is here, Bhavin is here, Amit is here, Prerna is here. Shehan couldn't join, he just messaged me. So they are all our mortgage brokers. And then we have Sandeep and Chris, our real estate lawyers. And then Bani would be here as a financial planner and insurance broker. So any topic related to your finances or insurance, please contact her. And then Deepak and Mustafa are the accountants. So any accounting questions, please contact them. Thank you. And again, a quick disclaimer, we try our best to get all the information from reliable sources, but we cannot guarantee its accuracy or completeness. So please seek legal advice or professional advice before taking action. Thank you. Now, today's agenda. First of all, we'll discuss November 2024 market report, which just came back a couple of days, just came out a couple of days back. Next is Canada's economic update from the lenses of Benjamin Toll, renowned CIBC chief economist. And then we have recent headlines. We'll discuss those. And then there is an announcement coming on December 11th by Bank of Canada for rates, interest rates. We'll discuss what to expect. And then we'll discuss what does it mean, whatever we discuss, like the lower rates, higher sales, what's next. And then we'll have Q&A session. So first, November 2024 market report. Now, as you might have heard, in November this year, we sold 40% more homes than November last year. We sold almost close to 6,000 homes in November. November is usually a slower month as compared to October. We all know that because the market is slowing down. But this November is surprisingly very hot, right? Not weather-wise, real estate-wise as well. Right. So if you look into this chart here, so we have sold almost 6,000 homes, which is much better than a couple of other years. But yes, it's still not the best November ever. There were sales more than that in previous few years as well, in the previous decade. Now, months of supply. So this is the very good measure, which you all know we measure. Now, months of supply is how many months it will take to sell all the homes, whatever is in the market as of now, considering no other homes come to the market. So based upon months of inventory, if it's less than 3 months of inventory, it's a seller's market. If it's more than 4 months of inventory, it's buyer's market. And between 3 and 4, it's usually balanced market. Now, in October, we were sitting at 5.1 months of inventory, which means it was a seller's market, sorry, which was a buyer's market, right? More than 4 months. Last year, November, we were at 4 months of inventory. But right now, in November 2024, we are down to 3.7 months of inventory, which is a big drop from October to November, from 5.1 months to 3.7 months. What does it mean? Volume is rising, number of sales are going up, right? So we are selling more homes than the homes coming to the market. So inventory is dropping. It's a good sign for real estate, right? Now, this is the how many sales we have available. We still have good number of sales. We are still sitting almost at the highest inventory in the last decade. So if you haven't bought yet, still there's good opportunity as a buyer. Take advantage of it because it won't last, as we'll discuss in next few slides. Now, average sale price, it says it has went up 2.6% as compared to November last year. I wouldn't pay too much attention to it because the average sale price is based upon all the homes sold in the year or in the month. So if in some months we sell more condos, it comes down. If we sell more detached houses, which are expensive, it usually goes up. But the good news is it's stable. It's not dropping. It means the prices are not coming down any further. So if someone was waiting for prices to come down more, don't wait. It's actually going up slightly. So don't wait. We probably have already passed the bottom, right? Now we'll discuss that again. So this is Again, the average sale price, as you could see, we are again almost second highest for the month of November in the last decade. Like, which is not surprising because once the prices goes up with inflation and everything, it should keep high. It shouldn't come down too much. The only time we had more higher sale price in November was in 2021, which was anomaly, as we all know, right? So, as I said, don't wait. Now let's discuss micro market versus macro market. When we say 6,000 homes sold, or when we say average sale price, as you know, it's of the combined everything. But if we break it down, this is how it looks like. This is for Toronto, not for GTA, just for Toronto. In Toronto, we have sold 681 detached houses in November, which is out of 1971, which is 2.9 months of inventory. Remember, I just said if it's less than 3 months, it's a seller's market. So we are almost in seller's market now for detached houses. Come Sammy's, only 2.1 months of inventory, which is definitely a seller's market. And townhouses, again, very close to 3 months or less than 3 months. So, which means the freehold segment, which is either detached, Sammys, or towns, is already in the seller's territory. So do not wait if you haven't bought your house. Buy it now before it goes more tight, right? So it's already tight for freehold. But when it comes to condos, we are still at 5 months of inventory. We sold 1,600 odd homes out of 8,200, so which are 5 months of inventory. So we still have good opportunities for buyers in condo sector, which is again is not going to last forever, which is also coming down. Just for your reference, couple of months back, we were at 6.8 months of inventory, close to 7 months of inventory. From 7 months, already down to 5 months. And it won't take too long before we are less than 4 months. And then it will be balanced. And then once it's below 3 months, it will be sellers, which will be sometimes next year. But right now, it's still a buyer's market. Take advantage of it, right? Now, let's discuss Canada's economic update as presented by Mr. Tall. So, what does he say? Bad news is good news. You know, we asked Mr. Tall, give us some good news. So what did he say? He said, you know what? If I tell you that Canadian economy has gone up 5%, like GDP has gone up 5%, and say we had 200,000 new jobs created, which is a very good news for economy. But actually, it's a bad news. It's a nightmare for Bank of Canada, who are trying to slow down the market, right? We all know what happened and what was their goal. So, in other words, because the fact is that we have a lot of unemployment right now and the economy is slowing down, which means the plan is working and they will keep on cutting interest rates. So that's the good news. So actually, yes, the bad news that we have unemployment, we have slowing economy, but that's the good news because it will mean they will keep on cutting interest rates, and that's as per plan. Also, the way we measure inflation in Canada is very weird. We spoke a lot about inflation in last many sessions. Last year, everybody used to talk about inflation, inflation, inflation. Now people don't even talk about it anymore because it's already under control. But you know what? The way we measure inflation in Canada, when we said we went up to 8% or whatever, is very weird. Why? Because we measure mortgage payments, interest rates of the mortgage payments in the inflation. So when they were raising up the interest rates, so interest rates were going up, mortgage payments were going up, automatically inflation was also going up. So they were trying to control inflation, but at the same time, they were raising interest rates, right? So it's very weird. Mr. Tall said it's like putting a humidifier and dehumidifier in the same room and they are fighting with each other, right? So that's what was happening. You know, There's only one country in the world, except Canada, who measures inflation the same way, and that is Iceland. No other country in the world measures inflation by taking into account the interest rates, the payments, the mortgage payments. In fact, if we measure the way the US measures inflation, we are right now at 1.2%, which is much below our 2% target. Weird, right? Now, it was never about inflation. It was about the cost of bringing the inflation down. And that's why they have to raise interest rate. They have to do whatever they could because they wanted to bring inflation down. And yes, they were overshooting by design. It's because they wanted to bring it down. We were too much higher. So they were overshooting when they were raising interest rates like by leaps and bounds. It was by design. It worked. Now they're cutting it fast, right? We already came down 1.25% from June to now. So, and will come down more. Neutral interest rate is 2.5%. So what does that mean? What is neutral interest rate? So as per Mr. Troll, who's an economist, he said if interest rate, the Bank of Canada's rate is more than 2.5%, it will keep on slowing down the economy. We are cutting rates, which means interest rates are coming down. So economy is still slowing down. It's not going up because rates are still higher. At 2.5%, it's like a neutral of your car. So right now we are in reverse gear. We are still coming down. So at 2.5% is actually neutral. And if you go below 2.5%, then we'll go forward. So that's as per Mr. Tall. So economists are pushing Bank of Canada to cut below 2.5%. They're actually pushing them to go to 2.25% so as we can go forward to boost the economy. I hope that makes sense, right? Now, so while variable rates will come down significantly further, right? So which is right now at 3.75%. So we are saying it will come down to either 2.25 or 2.5 in the next few months. So it will come down almost 1.25% or even 1.5%. But fixed rates won't go down the same amount. Keep in mind, very important, because fixed rates is already down. It's already closer to 4.5% in between that territory. And actually, it's a good rate. It will come down maybe another 50 points, right? 30, 40, 50 points. It will be somewhere between 3.5 to 4%, but it would not come down much further, right? Why? Because fixed rate does not depend upon variable rates or Bank of Canada's rate. It depends upon the bond rate, right? And our mortgage brokers who are very good expert in this, they will discuss this later in the session. So fixed rates is right now on a good territory. It would not come down a lot. And fixed rate also depends a lot on US, which already their bond rate is higher. So because of that, it won't come down. But variable rates won't be much higher than fixed rates. Or actually, it may even be equal or lesser. So that's a good lesson here, right? So variable rates are coming down and they will come down much more. And now let's discuss some headlines. The first headline, if you remember, Bank of Canada, not Bank of Canada, sorry, Statistics Canada comes out with the inflation report every about 18th or 19th of the month. So 18th of or 19th of November, the report came out that inflation went up to 2% because in October, when the report came, we were at 1.6%. The November report, when it came, we went up to 2% from 1.6 to 2. So it's actually went up. And they said it means they may not cut rates anymore, actually, at least in December. So that's what the headline was in November. So if you look into that, now this is the inflation. So when we said it went up, or what is inflation? So if you all remember, in 2022, we were at 8.1% inflation. Huge inflation. Everybody was scared. Bank of Canada was scared to death. So they put all those tough measures. They brought it down from 8.1% to below 2%. So we are right now at 2%. In September, or actually the report of October, which was for month of September, it was 1.6. And right now we are sitting at 2 again, which is very much where they want it to be. So no worries anymore, right? Now, so inflation rate accelerated more than expected. As we said, this was the October inflation report, which came up. So we already discussed that, not to put too much time on that one. Now, other big news which came out yesterday is unemployment rate. So our unemployment rate or jobless rate has gone up 6.8%. So, which is, again, now they're saying they would go for a big cut. Only the time the unemployment was higher like this was during pandemic for a couple of months, right? Beside that, in the last decade, almost 8 years, this is 8 years record, 6.8%. So we added 1.5 million unemployment. Not added, we have total 1.5 million unemployment people in November. So which is, as I said, 8-year high, just outside of pandemic era when it was for small time, we had unemployment higher than this, right? So which means now the chances of a large interest rate cut on December 11th. So let's discuss the rate cut for December 11th. What's going to happen? So this is the brief history. We were at 5% for a long time prior to June. That is again Bank of Canada's rate, not prime rate. Prime rate is always around more than 2% higher. So we were at 7.2% prime rate, which normally we look into when we discuss with mortgages, right? But Bank of Canada's rate was 5%. So from 5%, they came down to 4.75% in June. That was the first cut. July, it was second cut. We came down to 4.5. September was third cut. We came down another 25 points to 4.25. And then October was another cut, big jumbo cut. We came down to 3.75. So within less than 6 months, we came down from 5% to 3.75%. And we are not done yet. We'll be coming down even further, right? So next rate cut is December 11th. Some economists are saying they may not cut. Some are saying they will cut big. Now, because of why they're saying they may or may not cut, because a lot of economists, for example, this Desjardins economy is saying inflation, jobs, tariffs, all of these makes a complex situation, right? So based on all these things, what the Bank of Canada is going to do, that's anybody's guess. But most economists are now agreeing that they may go for 50 points. But 25 points is given. But they may even go to 50. As per Mr. Tall, 50-50 for 50. So he's saying it's a 50% chance of 50 points, right? Whereas Bank of Montreal, they're saying 75% chance or more chance for 50 points. So will be 25 points or 50 points, we'll see next week. Because of unemployment rate, expectation of 50 points is now higher. This is again a lot of headlines. Now, what does it mean? Lower rates, and we discussed sales are already going up. So lower rates, higher sales, what's next? So as we all know, we have discussed it before as well, that we are the only country in G7 which is having the acute problem for houses, right? Affordability is lowest for Canada, right? Now, first half of 2025 will be a tale of two markets, as per again Mr. Tall. One is a low-rise market, one is a high-rise market. So what does it mean? Low-rise, which is those detached, semi-detached, or townhouses, freehold houses, we are already having a strong market. As we see, as we just have checked a few slides back, we are already under 3 months of inventory, which means we are already in seller's market. The prices have already started going up, right? So we have a strong market and it will do even better when the rates come down. So, no question being asked. That's done. How about the condo market? The condo market, which is the high rise market, is frozen. That's the term he used. We are sort of still in recession for condos, right? This is probably the most significant test for condo market since 1991. Haven't seen such a condo market since 1991. This is significant. Developers are not building anymore. They are not building same number of units anymore because they are not able to sell. So that's why they are not able to build. And investors are unfortunately out of the market. Why? Because 81% of these investors are in negative cash flow. And because of that, they're not buying. So inventories were rising, right? But it has started coming down as we just saw the inventory. But still, there's a lot of inventory for condos, so which means there's still a lot of options, a lot of opportunities for buyers who haven't bought yet, right? If you are the first time buyer and you need to buy something, imagine buying a house which is close to $1 million, right? Or more. Most people do not qualify, first time buyers. And you need a lot of down payment. So enter the market with condos. They are at a super low price right now. Take advantage of it, right? Now, interest rates are going down. We all know that. We saw that. It's going to go down further. We know that, right? So we are accumulating a pent up demand. And these investors who are hurting now, who are out, will be back. So, second half of 2025 will be much better. And the next year will be even better. No question. This is going to happen. So, for a very short period of time, condo market is a buyer's market. It's still a buyer's market. It was a buyer's market, but it is going to be a buyer's market still for a short period of time. Take advantage of it. As I said, if you haven't bought, if you want to invest in real estate, you have never done it, don't be scared. Do it now because you are entering at the lowest time. You will be laughing next year or the year after, right? So we are accumulating pent up demand. Those investors will be back. New condos are not being built. We discussed that. So there will be no supply come 2026 onward because we are not selling units since 2022. And so they're not building anymore. So it takes roughly about 4 years for people, no, sorry, for builders to build condo buildings. So come 2026 onward, we will have very few buildings coming out, but the demand will be much, much higher. So, you don't have to be an economist to know what will happen. This is not I'm saying it, it's Mr. Tall said. So, coming 2026 and later, it will be on fire. So, it will be the year of condos. That's what he said. In 2026, it will be years of condos. Next year will be a soft condo market. Take advantage of it. After that, it will be in the sky. It's not a forecast, it's given. The only question mark is how long it will take, right? So never bet against the real estate market. Again, Mr. Tall's words, because the demand is always there. Population growth is still there, despite what the government is doing. We'll keep on increasing people in Canada, right? So Statistics Canada has already said we are already more than 41 million people in Canada. That was in March, right? And so we are having more people coming here in any way. 2023 new condo sales fell to a 15-year low. This is why we are not building. In 2023, we had very few sale. Let's compare. 2021, we sold 30,000 new condo units, very high. 2022, we only sold 21, came down from 30,000 to almost 20,000. 2023, we only sold 12,000 units. 2024 is anybody's guess. Definitely less than 10,000, even more, right? So we sold much less units. So which means In 2024, we'll have the decade low sales in new construction, which means no one is going to build, which means in 2026 and onward, there will be huge demand, no supply. Prices will go up. From a home buyer's perspective, it's going to get more affordable to enter the market because the rates are dropping, right? Which means variable rates are dropping. Also, keep in mind, there's a new amortization rule and insured mortgage rules, down payment rule, coming up in December 15th, almost 10 days from now, right? Or less than 10 days. So the insured mortgage cap, which is right now at 1 million, will be 1.5 million. What does it mean? Right now, if you want to buy a house more than 1 million, you have to pay 20% down payment. You cannot pay less than 20% as long as you just go to 1 million. 999 you can buy with minimum down payment. 1 million, you need 20%. But it's changing. Effective December 15th, you can buy with minimum payment up to 1.5 million. So a lot of people will again overextend. They will go to one like bigger homes with less down payment and they will qualify. So more people will qualify, which means the market will become more hot. Also, right now, if you are putting less down payment, less than 20%, you have to go 25-year amortization. So which means your affordability is less. So again, effective December 15th, it can go up to 30-year amortization with less down payment as well for first-time buyers. So which means, again, affordability will go up. So affordability will rise after December 15th by design because of these new rules. That will increase again the demand, right? So keep in mind. Now, Korea, Canadian Real Estate Association has done a forecast. This is for Canada wide that will have 6.6% more sales in 2025 as compared to 24. And prices will go up 4.4%. Keep that in mind. We know many of our clients who are on this call, who are investors, they're losing and they're losing big time. And it hurts. When we give this presentation, when we say buy, when we say market is going to go up, I know many of our clients, they feel being left out, right? And they want to exit the market and take losses. Our advice is it's time to hold if you can. Don't sell. There's light at the end of tunnel. So if you can hold it. But many people who have to sell, we understand it. But this is the message for those people who are right now taking losses, right? Now, keep in mind for those people who want to enter the market and they want to invest, we have a secret sale going on right now from a renowned condo builder. I have never seen such a new construction deal in my career of 20 years. Call us to get more details. Being a secret sale, I cannot disclose too much about it. But if you want to invest now and don't have to worry for next like 2 years for mortgages or down payment or for negative cash flow or anything or tenants, it's a deal of, I should say, many years, deal of decades. So call us. Also, we have very good assignment deals at a price much lower than 2018, 2019 pricing. So imagine buying at a price lower than 5 to 6 years back. So you're going back in time, buying at a time even lower than the price of 2018, 2019, when everybody wanted to buy. So those are the deals available right now. And we have it. If you want, or if you want to get more details, please contact us and we will give you all these details. So don't miss these opportunities. Take advantage before you say, I wish. So take action. Very important. One statement here, just announcement. There is a vacant home tax we have to declare in Toronto. Everybody, doesn't matter whether you live in your house or you rent your house. If you are in Toronto, 416 area code, you have to make your declaration. It was mandatory from 2023 onward. Sorry, for 2024 onward. For next year, it's already open. So you can do your declaration now. The deadline is April 30th, 2025. This is the link, or you can call us. We can send you the link again. So please make your declaration. Again, as we all know, real estate market has gone up almost 7% from 1970s till 2022. Huge gains. As we know, even if it goes up another 3% or 5%, doesn't matter. We will be in a category between 3 to 6 million by mid 50s. So there'll be again huge gains, right? So you need to take action now. So call us to book your appointments. And now we'll open the floor for our Q&A session. Thank you, everybody.
Thank you very much, Sam. Very informative. Right to the point.
Thank you. Thank you.
Any questions people have? Floor is open.
Yep, the floor is open. Anybody having any questions, please feel free. Ask your questions now. You know what, before, I know people normally let me break the ice. Let me ask our mortgage experts here. December 11th. What, everybody, give me your one by one, your expectation, right? So we can
50-50 for 50 as safest.
Thank you. Yeah, but let's take from one by one. Kishore, you want to start?
Sure. I think, yeah, you pointed out all the points, Sam. You can argue both sides, but I think Benjamin Tal took the safest bet saying 50-50 for 50. But the good news is, look, either way, there's a drop. That's the positive outcome that's going to come out of this. It's actually finally all this time, the delta, the difference between the variable and the fixed rates was almost over 1%. Now that gap is coming down to almost 75 basis points, which is really going to change people's perspective on the variable rate again.
Perfect. 50-50 from Kishore. Because Kishore is from CIBC and Benjamin is also from CIBC. I believe they are with the same page. Amit, you want to take a call, my friend?
My pleasure. Good morning, everyone. I agree with Kishore. I'm going to say 100% chance of 25 cut and 70 to 75%. It's 50%, 50 basis point cut. So I think this is just the start of the cuts. My opinion is rates need to come down 2% over the next 18 to 24 months. So it's just going to tick step by step. We've seen 125 already in the last year. And I think there's another 2% that'll come over the next 2 years. So every rate cut, we're going to play this probability game, and 25 for sure. And let's go with 50-50 for 50.
Okay.
Wow. Everybody's playing diplomatic, eh?
No, but Amit's already said, he said he's going to go with 70 to 75% chance of 50, right? So he's more bullish. Let's discuss, Prerna. What do you say?
Yeah, for sure. Our anticipation is 50-50 for 50. But we already know that there are further future rate cuts coming in 2025 in January. So right after December, there is another rate cut in January. So fingers crossed, 50 for 50.
Okay. Great.
Herman is here. Let's hear Herman.
Herman.
Well, I was a little bit more bearish before, thinking that they were going to be doing this quantitative easing a little bit slower at 25, and I was actually shocked at the 50-point drop last time. So I'm going to go 99%. They drop it by 50 basis points this time. More so also because technically the Bank Canada isn't supposed to have anything to do with the actual party in power, but I feel as though there was a relationship there. And before the holiday season, everybody has been complaining, and they pulled this stunt with the GST. So I feel as though it's most likely to get that 50-point drop, as well as a lot of renewals are going to be coming up in 2025. And they want to make it easier on those people to not have such a payment disruption, right? When they do renew.
We heard it 99% for 50. Stakes are going higher, my friends.
Yeah.
Where's
I mean,
Bhav?
it'll help me too. So I'm just trying to manage this as
No,
well.
no. Again, this is just, again, we understand. We are all predicting, right?
Yeah.
But again, it's good. It's good. We are liking it. Bhavin, I know Bhavin is here, but maybe he's not able to take the call at this moment. That's fair. He might come back. So anyhow, everybody, as you heard from most of our uh, experts, mortgage
Sam, you can hear
experts,
me?
I think everybody wanted to hear this. So yeah, Bhavin, are you here?
Yeah, Sam. Hey, I'll go more conservative, more 25 basis point for this December. Anyways, we're in the right direction, and the rates are predicted to be around 2.5% compared to 3.75 right now. So we're in good direction. I think it's good for clients, it's good for business, good for economy.
Absolutely, absolutely. No, again, I like it. As I think it was a very fruitful and very nice discussion where people have given their opinion. And again, this is opinion. No one can be right. Not everybody could be right. Not everybody could be wrong. So right. So we would be definitely having 25 points or 50 points, which either way is a good news coming out, right? So as everybody said, we are heading in the right direction, and the rates are coming down, and they're coming down fast, and they are going to go down much further. And that will definitely, we have already seen, the volume has already gone up. Volume is a leading indicator. Prices always follow later, right? So because our number of sales are going up and up every month, we have gone up 40% more sales in October as compared to October last year. We have gone 40% more sales in November as compared to November last year. Keeping that in mind, it is going in very good direction. We would be hitting the target, and the market will be again coming back. 2025 will be a better real estate market than 2024. Let's put it this way. Yep. Let's ask any questions. If anybody have any questions and want to ask our expert panel, we have accountants here, we have financial planners here, we have all these mortgage brokers here, we have lawyers here. Anybody having any questions, please feel free. Otherwise, I have a lot of questions to ask my expert panel here. But before I ask any more questions, let's give chance to other people. Is it my presentation was so wonderful? Everybody understood everything, no questions.
No questions. Everything's clear.
Fair enough. Fair enough. Now, let's ask the lawyers. Sandeep is here, Sandeep Chopra. Sandeep ji, you are looking into the number of sales happening, and you are also looking into a lot of new construction sales you are doing as of now. What's your take? What direction? Like, you also see how the market is behaving. If you can give us your side of story, that would be great.
I think at this present moment, builder sales are drastically hit by because the appraisals are not coming up to the mark. So this is the greatest disadvantage which buyers are now taking at this moment, especially in Oakville and some other areas. It's way less, like 200, 300,000 coming down the appraisals, and people are eager to forfeit their deposit and they are asking me if the builder can do a mutual release, but they are not doing it. This December month and coming January, I have seen little bit increase in the sales.
Okay.
Yes.
So
So
there's a
it's a
light at
positive
the
sign
end.
now.
Yeah. So which means you could also see some light now. So yes, you're
Yes.
right, Sandeep ji. I agree. There was a lot of people were hurting because appraisals, you're right, they were killing the deals.
Yes.
People who have bought for whatever price, when appraisal goes and appraise the property, they don't give the same price until unless you go back to the official lender of the builder, right?
Yeah.
But keep in
Yes.
mind,
Yes.
every builder has an official lender
Yeah.
who finances their projects initially. So they guarantee you the same appraisal, right?
Yeah.
So if you can go to that lender, if you qualify, then that's the best scenario because you don't lose on appraisal. Otherwise,
Yeah.
you're right, that was hurting. But as Sandeep ji said, now it's getting better and there's a light at the end of tunnel. I
Yeah.
know our mortgage brokers must be having the same feeling about the appraisals coming down. I know, Amit, you do a lot of these new construction deals. So what's your suggestions and what's your take on this for appraisal?
It's an interesting environment because the idea that when you sell pre-construction, we always have the conversation with clients that they hope as the value is up and you can close, but you should always plan that you need to close the property in the event of value reduction. And for the first time in 15 or 16 years of new con boom in Toronto, the values are coming down from what people have bought it from if they bought after 2020, 21. And those value differences are about 10 to 25%. And so it is tough on people. Some people have to find different ways to close and down payments and stuff like that. So at the end of the day, um, it's not really a loss, is what I'm teaching my clients, unless you actually sell it. So if they can actually close the property, and then once the market heals and recovers, it's not a loss unless you actually sell it. It's just a delay in the process.
Very well said. You know what? That's what, as you could see even in my presentation, I was saying the same thing that, hey, if you don't have to take a loss, if you can close, close it. Don't sell because you don't like the market at this moment. No one likes the market, especially condos, right? Houses, people are laughing, right? Guys, it's the only condos we are talking about when we are talking about all these paints. But freehold segment is already doing very well. The houses pricing have already started going up. There is already multiple offers happening. I have sold at least 4 or 5 houses in the last couple of months in multiple offers, right? Some of the buyers are on the call. So there are opportunities. There are still opportunities for freehold segment. So freehold segment doing very well. Condo segment not that well as of now, but it will get better.
It's actually going to cause an implosion for supply because the prediction is between 2028 and 2030, the number of units coming online is like 5 to 6,000, and they need about 30,000 a year. So if you can survive the next 2 years, the amount of new condos coming at the end of this decade is supposed to be so low that the prices are going to skyrocket back up.
Absolutely. Absolutely. That's a great advice again. Great. And again, any other questions from anybody? Okay. Let me ask this question to our accountants on the call. Maybe Deepak, if you're here, or Mustafa ji, he's here. I can see him. People are taking those losses, right? But I was talking to one of my client a couple of days back who is forced to take some losses, and he was asking these questions. Hey, what can I do about these losses? So I told him to talk to your accountant because there would be gains you have, and people don't even know they have gains in interest for deposits they have in banks or stocks or mutual funds or whatever. And probably I said you can take some losses, and you can write off some losses against those. It's a very good question, I believe, for our accountants. If you can probably shed more light on that, that'd be great. Mustafa ji, are you on the call? Or Deepak? I can see Mustafa ji is on the call, but probably he's not available to answer the question at this moment. But again, maybe I'll try to get the answer, and maybe even any other person who has answer to this, like any other experts.
Well, I am a CA as well.
Perfect. So let's go to a chartered accountant.
So the gains on all the investments, again, you can't actually write them off unless you actually dispose of those trades. So the gains are not real, just like the losses are not real until you actually action it. So, people whose stock portfolios have gone up 28% in the past 6 months, there's no tax. It's one of the reasons why we believe in real estate, because anything that goes up in real estate is also tax-free. So, for all the other mortgage brokers here as well, when you refinance, that money is tax-free. It's the number one thing I teach my clients. So just like you asked with the gains, whether you're buying Bitcoin or you're buying ETFs or stocks, all those gains are not actually taxable unless you get rid of the asset.
Fair enough. But if I'm correct here, Amit, you're right, you cannot write off the losses against the gains unless you realize them. But I believe you can keep the losses in your books. How many years you are allowed to keep the losses?
7. So you have up to 7 years to claim the losses you incur. But again, those losses are incurred if you sell it. So, for example, if you buy Apple stock for $100 and you sell it for 90, if you've lost $10, you have 10 years going forward and 7 years going back to offset it. So the
Okay.
balance of how you can offset it is a long period, but those gains and losses, they also have to be in the same category. So stock losses you can't offset to real estate, and if you sell art, you can't offset it to a loss with a car. And so the category of losses is tangible and non-tangible. So that's one thing you have to sometimes teach clients, that if they've lost 50,000 in the market, they don't get to offset it to a $50,000 house gain. They're two different categories.
Okay, fair enough. Again, that's a good information, which many of us may not even know. Thank you for clarifying. So, but again, keep in mind, yes, if someone have to sell a unit, house, condo, whatever, at a loss as of now, there is time to gain it back, right? So, which means if you have other properties and you would be selling them down the line and you'll be having profits against them. So you can write off the losses you have today against the gains in future.
That is correct.
Okay. Mohit just made a comment. He said losses can be taken back only 3 years. So that again, whether it's 3 years or more, going back, but forward is 10 years, Mohit. Is that right? So
Forward is 10.
Okay, fair enough. So 10 years forward, 3 years backward, whatever it is. So you can, which is a big span, any losses you have in these 13 years in total can be balanced with each other. So it's a good way of balancing books. Yeah, great. Great, thank you. And any other questions from anybody else? We still have 10 more minutes. Again, let me ask this question. As we said, there are a lot of people who have upcoming closings, especially our investor clients, and they are not qualified to get mortgages from A banks, right? Because A banks are very, very tight these days. But there are opportunities in the B segment or in the private segment right? So which our mortgage broker can put more light on that. So there are options, there's a ways to close them, right? So again, Prerna, Amit, Bhavin, I know Kishore cannot take you to the private banks, but these people, because they work with private as well as B banks. So if you can shed more lights and at least tell our investor clients that, hey, if you have a closing coming up and you are scared because you're not qualified with A banks as of now, there are options. Can you please explain that?
Sure, I'll take a stab on that one. Um, we know with A banks, we have very tight ratios. They go up to maximum 48, or maybe sometimes 50-50. But when we go to, I'm talking about GDS and TDS, but when we go on B side, we have access to the lenders who can go up to 60-60 ratios, which is GDS and TDS. And they have very good programs, especially for self-employed people who have their own business or sole proprietor. They have their own business, but they do not declare that much income to CRA. But based on their 12 months bank statement, we can get them qualified towards B side. Rates are very comparable right now. It's not, it's not too bad as it used to be. And there is a lender fees associated with that, which is 1%. So definitely, if you cannot qualify on A side, you can go towards the B side, and there is an option to the private lenders as well. So on being a mortgage broker with the on the broker channel, we have access to those as well. So yeah, and
Great.
if you yes.
Great, thank you. So that was a good answer. Appreciate that. And Amit, can you also, I know you do a lot of B side and private as well.
Yes, I agree with Prerna. Everything she said is correct. The way I explain it to customers is the following. Everybody gets a mortgage, just depends which bank and what rate. Every single person can get a mortgage, whether you've gone bankrupt, whether you have a business, whether you're self-employed. Um, the A and B is the common theme. I kind of call it A and A minus. Then after that, there's subprime. Then there's private mix, which is corporations that do privates. Then there's private individuals. As long as the appraisal value is understood by a lender, they will lend on it, and they always do. So, you know, to give an extreme example, if you bought something for 1 million and the appraisal's 500,000, no one's going to give you 1 million. That's just common sense. But they'll give you 500,000 or 450 or 400. So as long as appraisal value, based on appraisal value, everybody gets a mortgage. That's my answer.
Perfect. Very good answer. Thank you. Yep. And Bhavin, you want to take a stab on this as well? Anything you want to add?
No, Sam, it's well covered. It's case by case, as Amit also says. There's always a lender who's willing to support B side or be it private, so we can always find someone and help the client out.
Awesome.
That's why they say you're richer than you think.
That's Scotiabank model. Well done.
Yeah,
Yeah.
that's right. Very well said, Haji. As we said, you're richer than you think. So Scotiabank motto and slogan. So yes, you can always get a mortgage. You just need to find the right mortgage broker, right advisor. And I'm very proud to say I have a best team in industry. I have these wonderful people who take time to come on these calls to answer your questions, to advise us. And again, also one thing I want to add here. One of my very good client, I met him this week. He did mention that, Sam, one thing I want to add, if your mortgage brokers can also give us some rate information on the calls, because normally they always say it depends upon various factors and depends upon various situations. We all know that. But if they can give us the best case scenario as well, what's happening in the market, that will also help us to understand the market in a better way. So I would now request all our mortgage brokers, I'm going to put everybody
That's right.
answerable right now. If you can give us what is the best rate you are seeing in the market as of today. Again, we are not going to hold you accountable for that. And we understand it depends upon a lot of other factors, including your situation, including your credits, including your debts, many other things, right? So we would not hold you accountable, but at least give us some direction and give some, especially our clients, some ideas. So let's go one by one. Who wants to take first?
I'm happy to go
Uh,
first.
Okay.
So, from the A side, and Kishore, you can jump in. From the A side, it's around 4%, give or take a quarter point. B lending is always 1 to 1.5% higher than the A rate. So if we use 4 as an example, then B is 5 to 5.5. And then private is always about 3% higher to 5% higher than the A rate. So if the A rate is 4, then the private is 7 to 9. So the way I work with it is we'll get Kishore's best rate, and then you add 1 to 2 for B, and then you add 3 to 5 for private. That's the answer. That'll always be the answer.
Perfect. Very well said. Kishore, come now. We need your number first.
No, I agree with that. I mean, like, so picks, I would say mid to low fours. It used to be lower. There was a little bit of a spike in the bond yield. It's kind of crept up a little bit, right? But now I think yesterday we had a big drop as well. So we should see some movement on the fixed rates back to that 4 mark.
Okay.
And variable is again low fives based on today's prime of 595. That's obviously going to change very soon.
Perfect. So you heard it here. You heard it from Kishore. Fixed is close to 4. Variable is low 5s as of now. And it's going to go down further because rates are coming down come December 11th, right? So the gap will be much less after December 11th between fixed and variable. That's what we understood, right? So yes, anybody else, any other mortgage broker want to jump in and give us anything different than what Kishore or Amit have said? The gap between fixed and variables or
No,
any different rates?
nothing different. Kishore and Amit said the right thing, and I agree with it completely.
Awesome. Thank you. And one last $1 million question before I let everybody go. If someone has to choose today, right? What should be the way, fixed or variable, right? We all know this is the question everybody wants to know. Every call people ask this question, and but the situation keep on changing. So we need to ask this question again and again, right? Because whatever answer was in the last call may not hold true on this call. So as of today, if I am going to get a mortgage, what should be my way? Should I go fixed? Should I go variable? Mayor Prerna, you're already in the screen. Let me ask you.
Okay. So it really depends on situation to situation. What is the risk appetite of the client? Can they take the risk and can they go variable? Obviously, rates are going down, so I suggest variable for every client. But if they are qualifying with a lower rate, which is a fixed rate, then obviously fixed. And also depends if you are an investor and you want to sell your property within a year or so, and you don't want to keep the property or you're just closing your recons. It depends on that situation as well. So you don't want to get into a situation where you are taking a 3-year fix and you have to pay a heavy penalty while breaking that mortgage. So it depends on situation to situation, but if somebody has a good risk appetite, go for variable.
Fair enough. Thank you. Well said. Kishore.
I agree with what Perna says. And one thing, like Benjamin Tal pointed out, the floor of the fixed rate, we're approaching it soon, right? There's a saturation point after which the fixed rates aren't going to go down that much, and the variable rate's going to surpass it. So remember, in a normal world, the variable rate was 3%, fixed rate was 4%. You took a variable to take that risk, you got a reward. Right now, we're in an inverted yield curve, and what's happening is it's going back to that normal position. So if we go into the fixed rates are almost near their natural bottom, what I would suggest, what I'm thinking, but fixed variable rates are going to overtake. So if you could survive the cash flow, if the rate of descent of the variable is not as bullish as we expect, and let's say it does come down, but comes down over a longer period of time, and it can absorb that cash flow, then variable might make sense. But there's a lot of looming uncertainty, and you want that peace of mind. And fixed rates, you're not going to have that much regret if you're going on fixed, because it's not going to go from 4% to 3%, is what I'm trying to say.
Fair enough. Well said. So what I'm hearing is it's yes, if you are investor, probably go variable, right? Because you may have to sell down the line in investment property. If it's a principal house and you want to have some certainty in your payments, then probably go fixed. But in long run, probably variable would be the winner. Amit, do you agree with that?
Absolutely nothing to add. They nailed it.
Perfect. Perfect. Anything else, Bhavin? We still want to hear from you. And Herman?
Sam, they were right to the
We
point.
will not let you say same thing. Just add some lines, my friend.
So the only piece of advice apart from that is if they do qualify for a variable and they are okay taking that variable, the advice I've been giving to my clients is take variable, keep it there for a year. So let's see if the rates do go down to that percentage level, you should be able to fix it again around 3.5-ish. And at that point, you can go ahead and fix it around 4 or 5 years at that point. For clients who are speculative, or for clients who are worried about where the rates are going. But as I said, I think majority time, just take variable, keep it there for a year. As you see the fix going down to that 3.5%, lock it in. I think that's what clients should do.
Bhavin, do you see rates going to 3.5% for fixed rates?
So it is already below 4% when you're looking at a high ratio mortgage. There are banks who are willing to go below 4%. You can see. I think it would. Even the 30 years amortization is 4%, right? So easy 25 beeps or 50 beeps. And I think after that, as you say, it would be at a saturation point where fixed won't go down below that. But yeah, there is a chance. Yeah.
Perfect. Herman, do you want to add some lines, my friend?
Yeah, I think everybody pretty much nailed it. But what I advise my clients are who are first-time home buyers, or they make their decisions based on budgeting, I always recommend somewhere to a short to midterm fixed right now, uh, because you want to have some kind of stability or a budget, especially if it's your first time getting into a house. You don't want to get into a product that you're not sure about, even if we do explain it to you, because right now there's a high degree of variability. So it doesn't make sense to get the variable. And I think just one last thing about variable rates is the people that are speculative, you can take a chance on variable. And if for whatever reason you see that it's not something that you enjoy or you don't see it trending in the right way, uh, almost all lenders, they will allow you to convert that variable rate mortgage into a fixed rate that's either equal to or greater than the term remaining. So let's say you took a 5-year variable, and in 3 years' time, that variable rate is, or 2 years' time, that rate is higher than what the current fixed rate is. You can go to your bank or your lender or your broker and ask them to convert that variable rate into a 3, 4, 5-year fixed at no cost to you, and take advantage of a lower rate.
Great. That's what I wanted to hear from everybody. Thank you for your input. I really appreciate our expert panel's views and your time. It's really valuable. You guys add a lot to our seminars. Again, on behalf of our clients, I really want to say thank you to the expert panel as well. And again, to all our audience and who are watching now and who would be watching this recording down the line later, please talk to these people. They are here to help you, right? If you message them and saying, I'm Sam's client, I'm pretty sure you will get much better response on much better rates and the better uh, service from them, right? Because we have that relation with these people. We want to help our clients, right? That's the goal we have. We always put our clients first. That's the motto. Great. Thank you, everybody. Thank you for taking time out on this Saturday morning. I know it's tough, especially in December when everybody's going in holiday mode. I want to wish everybody happy holidays. Christmas is coming, so it's happy Christmas for people who want to celebrate, but otherwise, everybody happy holidays. Enjoy your time with family. This is a good month to spend with time with family, and a lot of people will be going on vacation, I know. So please enjoy. And also, if you drink, drink reasonably, don't drink and drive. That's a message I want to give as well. Thank you.
And we couldn't send
Thank you.
the Christmas cards because of the strike.
Yes.
So I also wish everyone happy holidays, and who celebrates Christmas, Merry Christmas to everyone.
Yes, yes. Thank you. Thank you for pointing out, Haji. Yes, we always send, as you know, our greeting wishes by mail as well. And because of Canada post-strike, we are not able to send our Christmas cards this year. So please accept our happy holiday wishes, and we'll be in touch. We'll have a new session in the new year.
All right.
Thank you.
Happy holidays.
Thank you.
All right,
Happy
Nirmal.
New
All right, Sam.
Year.
Thank you.
All right, guys.
Bye.
Thank you.
Thank
Bye.
you.